Kirk Tugwell, the House Geek here with Mastermind the Market, your real estate stats update for the Twin Cities area. Well, it's been a little while since I've done one of these videos. I've kind of been tied up wrapping up my new book and class, Improving Outcomes with Data, as well as Hacking Investment Real Estate. We're going to have some more information and dates on that coming up shortly. But getting to the topic at hand, are we going to see another 0.5 point cut to mortgage interest rates based on what the Fed just did? Well, we're going to dive into that in just a second. But first, we're going to take a look at what's happening in our Twin Cities real estate market. All right, let's dive in and take a look at that data. First, looking at the showings per week, per listing. So I made a couple of notes here using some color differential showing coming into Labor Day weekend, showing the slowdown in the showings per week per listing, and then what I like to call the September bounce. And so we can see slowing down 3.17, and then once we come out of that last weekend there, going into September, we go back up to 3.48. So basically just as good as being on the market in early August timeline. All right, got a new graph here showing activity, and we can see that bounce in showing activity as well coming out of that weekend. Some other data points, new listings in the marketplace up week over week, going from 1116 up to 1442. Pending sales dropping off, but not a big surprise there because there's a little bit of a lag before properties go pending, so I'd expect that to bounce back. And here's the good news for buyers, as I've talked about earlier this year, is that inventory of homes up 12.6% week over week. Total average 3 months, 15%. This spells opportunity for buyers, as well as that market meter. So slowing down to a 3.07 on the market meter, benefiting buyers. So when we look at that 3.07, we're sitting right about here, kind of getting into that stronger buyers market range. So something to take advantage of if you've been having a hard time getting an offer accepted or certain terms accepted with your offer. This market condition really is benefiting buyers. And I've explained to people that are looking to do the buy-sell, if you are looking at buying a property first and then selling in that peak late January, early February-ish market, that you can really leverage the market conditions upwards of 10% in your favor, buying in the October, November, December timeline, getting your house ready, putting it on market in late January, where we start seeing that multiple offer situations. Looking back at the market meter, you can see right as you come from December into January, we go from a stable market into a pretty strong seller's market range. This last year, again, stable market into seller's market range. So we're expecting, especially with the interest rates, and we'll talk about that here in just a second, that with those interest rates, we're probably going to see a stronger market than this year, much more along the lines of a 2023 market. So yeah, right now, really benefiting buyers, but sellers, your time is coming shortly. All right, let's take a look at the topic. We were discussing interest rates. So this is the bond market. And here is when the Fed said, hey, we're dropping rates 0.5 point. Well, look at that. We see rates moving up here, okay? So, or bond prices moving up. Well, why is that? Because between here in this drop and here, that Fed cut was already baked into the bond market, which drives the mortgage market. So when the Fed kind of followed through, there really wasn't much of a change. Now, expand out here to a full year. Yeah, it's back up a little bit, but no, we're not going to see prices. Here we go again. Here's where we wrapped up yesterday. 6.15 average, we're not going to see a half a point drop today. We're actually probably going to see things move back up a little bit, because when the Fed speaks and says they're thinking about doing or likely to do a rate cut, then the bond market reacts, the mortgage market reacts, and by the time the Fed actually does it, it's already been priced in. So what we really want to keep an eye on is the Fed chatter for the next rate cut, to see rates move down again, or economic reports. So that's something else to keep an eye on. Hopefully you found this information valuable. As always, if you have any questions, feel free to reach out. Take care and have a great week.